Good afternoon, everybody. Welcome to today's webinar to help introduce you to contracts for difference, which are routinely referred to as CFDs. I'm joined today by my colleague here in Greenwich, Connecticut, by Rabbi Ekholm. He's going to be around to answer any difficult questions that you might have on the topic. I'm just going to bring up on my screen the contracts for difference PowerPoint presentation, which you will receive at the end of the session when we're all done and when we've answered all of your questions. And you'll also receive a link to today's recording later this afternoon. And I just want to double check. Everybody should be able to see the presentation on screen. I think you should be able to see it. Okay. All right. Let me know if you cannot see the presentation on screen, and I'll make a move to amend that. Okay, let's get underway. So what I'm going to do today is to explain the effectiveness of CFDs, contracts for difference, as a proxy for stock transactions, and help you better understand several efficiencies that arise from trading them compared to actual shares in the underlying company. By the time we are finished with today's session, I anticipate that you'll be more familiar with the treatment of margin, order routing, and commissions due on CFDs compared to share trading, as well as the many benefits of trading CFDs through an account with Interactive Brokers UK Limited, which I will refer to going forward as IBUK. Before we get underway, and because we're about to discuss leveraged investments, I have put up on the screen right now a disclosure of risk screen, which I'll give you a moment or two to read. Please use the chat panel to ask any questions about today's session, and I'll get to them either throughout or at the end of the session. Okay, then let's first define a contract for difference, and then I'll outline the products available for trading through IBUK. A CFD is an agreement to exchange the difference between the opening and closing value of a share, index, or commodity. The difference is based on the change in price of the underlying equity or index over the time the CFD remains open. Mark-to-market profit or loss is reflected in the customer's account daily, and therefore could change the value of funds available for trading each day. IBUK offers contracts for difference covering more than 4,440 shares and indices across the US, Europe, and Japan. In order to trade contracts for difference, investors must have a margin account. That is because when trading notional values, investors use leverage to create a larger position in the underlying symbol, and to facilitate this position, they must borrow and finance the money from IBUK, which, as I will later explain, takes out an exact match for the customer trade in the market for the underlying shares. Due to regulations, US, Canadian, Australian, and Hong Kong residents are unable to trade CFDs. However, the US exclusion does not apply to a manager who trades through an offshore entity. At the latest count, IBUK offers more than 4,440 CFDs on European, APAC, and US stocks and indices. As you can see from the table on screen, the popularity of US investments as a destination for global investors means that almost half of IBUK's offering is in US-listed stock and index products. The second most popular product offering is from the UK, where the CFD market flourishes as a result of the introduction of the stamp tax. So why choose IBUK CFDs? Well, IB UK offers a low-cost solution for investors wanting to trade contracts for difference. The low commission and transparent pricing structure with no artificial widening of the spread, coupled with low borrowing costs for financing your trade, makes for an efficient product lineup. Our leveraging ability is also a good reason to consider IB UK for this product, as it can, on most occasions, be greater than leverage on traditional stock trading. For investors in British, French and Belgian CFDs, there is no stamp duty to pay on those transactions, unlike the traditional stock alternative. In the UK, for example, a £10,000 sterling purchase would incur a £50 sterling tax payment to the government. We will discuss IB UK's execution quality in a moment, but as our existing customers already know, IB UK is a strong, conservative and secure broker to do business with and holds more than $5 billion in consolidated equity capital. A contract for difference from IB UK is designed to match as perfectly as possible the performance of the underlying asset. Investors can establish long or short positions using CFDs, and they are designed to exactly match the price performance of the underlying shares. IB UK share CFDs are routed using IB Smart Routing software, like we do for stocks, and quotes are identical to the smart routed quote for the underlying stock. IB UK CFDs also feature direct market access, DMA, meaning that non-marketable limit orders rest on the underlying exchange. IB UK CFD traders also benefit from the same order types available for stocks, including having the ability to participate in auctions. Several algorithms are also available when trading CFDs. IB UK CFDs are designed to mirror any corporate actions that may arise, such as dividends or stock splits. CFD holders will receive a similar cash disbursement to replicate dividends, while the number of CFDs held will be adjusted in the event a company awards new units to its shareholders. IB UK Index CFDs offer similar benefits. While being quoted differently than the related future, the Index CFD is quoted as a continuous index. The Index CFD quote has the same spread and the same price changes as the related near-month future. As a result, the Index CFD is designed to provide the same returns as the related future. This is very different from other CFD providers. IB UK charges a transparent commission, does not widen its quotes, except briefly during material news announcements, and honours its quotes, i.e. there are no requotes, though we reserve the right to do so in the most extreme market conditions. IB UK offers a couple of genuine advantages to its customers, which I've displayed on screen. Most importantly, you need to make sure your CFD broker is secure and can endure through good and bad times. IB Group has a 38-year history since 1977 and over $5 billion US in consolidated equity capital. Customers might benefit from using IB Group's proprietary trader workstation technology and find further cost advantages in the areas of commission, order routing, and margin. Let's review each separately, starting with TWS integrated software. Interactive Brokers offers trading in a broad variety of asset classes around the world, including stocks, options, futures, Forex, bonds, funds, spot gold, and CFDs. IB Group connects its customers to more than 100 electronic trading venues around the globe and offers its own FX trading platform. Our single universal account lets customers trade multiple asset classes from the same screen, allowing them to view the underlying ticker on one line and trade the CFD from the next line, for example. All of our products conveniently appear in the same statement. Our global product offering is available at ultra-low commissions to our customers. Commissions on European CFDs is subject to a minimum €3 per transaction, but is set on a trade value basis and starts at an extremely low 0.05%. A trade involving €10,000 face value would incur a commission of €5. Customers trading larger volumes might benefit from our sliding scale fee structure. The initial breakpoint comes in at volumes above €10 million per month, on which fees are 0.03%, while volumes above €100 million monthly pay 0.02% of trade value, subject to a minimum charge of a single euro per transaction. CFDs on US shares start at just 0.5 cents or half penny per share, with a minimum of $1 per order. As with European orders, customers benefit from a decreasing charge as they trade higher volumes. Note that commissions are based upon volume, while European commissions are charged by transaction value. As a pioneer in trading technology, Interactive Brokers Group makes available to customers of its brokerage affiliates proprietary IB Smart Routing, whose purpose is to achieve the best overall cost for marketable orders. IB Smart Routing technology looks at the best quotes across competing exchanges, including, for example, the London Stock Exchange, to determine its reference value for quoting a CFD to its clients. That reference rate might be based upon the best bid at one venue and the best asking price at a competing venue. When one exchange offers a price advantage over another, it is the role of our smart router to pick it up, ensuring that the customer is provided a reference rate at least as good or better than what you can see at the primary listing exchange. Note that IB UK generally does not widen the quote outside of what investors can see at the exchanges. CFD trades through IB UK are executed on behalf of the client in the same way that we execute stocks. The execution price IB UK receives in the market or internally is provided to the client without widening the execution price. In addition, customers are provided with a variety of order types that could improve the price at which the trade is executed. For example, under certain circumstances, clients using limit orders could possibly achieve a better priced fill compared to the best available screen quote. Finally, CFD orders submitted outside the current bid-ask spread price of the contract, known as non-marketable orders, generate matching non-marketable orders for the underlying on the exchange selected by IB Smart Routing technology. Those non-marketable orders will rest on the exchange until the order becomes marketable or is cancelled. Customers may use leverage to fund investments, including CFDs, which allows them to buy or sell a greater face value of an underlying ticker symbol using a smaller amount of capital. Such leverage could, under adverse circumstances, expose clients to losses which may exceed their initial investment. CFD trading is therefore not suitable to all investors. CFD leverage requirements are generally more favorable than those for trading stock using leverage, and under no circumstances will they be worse. Leverage rules are subject to regulations, or in the case of OTC CFDs, broker requirements, which are subject to change without notice by your broker. IB UK currently permits CFD investors to control a notional amount of stock, approximately 3 times as much as the amount of stocks one could buy or sell under existing leverage rules for stocks. The amount of leverage for stocks also depends on whether you are buying or selling. Index CFD leverage is generally the same as for the related future. Investors would do well to remember that leverage works both ways, and that at this kind of leverage, an adverse 10% change in the value of a share price could wipe out the value of this initial holding. Investors using leverage typically borrow from their broker to finance trades. We suggest to investors considering doing so to compare the low rates offered by Interactive Brokers affiliates against those of other brokers to see the advantage of trading through our firm. IB UK charges a low spread above a benchmark rate of interest. The rates are readily available on our website, and we ask you to review and compare our rates against others. Making sure you keep on top of your trading costs could benefit your bottom line. On the screen is a worked example of the costs associated with buying CFDs representing £300,000 sterling. Here, an investor buys CFDs using a 10-to-1 ratio and a nominal amount of £30,000. Do note that when using leverage, you're being charged interest on the face value or notional amount of what you're buying or selling, the leveraged amount. Your account is debited daily on this amount at IB UK's low interest charges, which are clearly displayed under the interest and financing costs area of our website. These charges are specific to CFDs and are applied in a blended fashion, meaning that you pay a blended rate of interest according to each displayed tier. In this case, I've calculated interest applicable at Tier 1 and Tier 2. This position is assumed to be held over a 30-day period. You can see the monthly payable interest rate costs according to Tier 1 and Tier 2 applied rates and how much it would cost to run a trade of this size under similar conditions. Note that what I'm showing here has nothing to do with the performance of the trade itself. Statement profit and loss is considered separately. There are 33 order types available to IB UK clients for CFD trading, including algorithms and on-open, on-close orders. Sellers can create short CFD contracts if the underlying shares are available for shorting. IB UK offers many shortable CFDs. Profit and loss calculations are posted daily to client accounts, while trading is the same as that on exchanges for the underlying shares. Clients will need market data subscriptions for CFDs and global CFD permissions before they can trade. Likewise, clients will be able to trade index CFDs when permission is granted, although index CFD market data is free. Index CFDs are shortable, just like the futures contracts, and daily P&L adjustments are made to your account. Margin requirements for the CFDs are the same as for those of the futures, including an intraday margin rebate. Forex CFDs are now available for the same 94 currency pairs IB UK offers as Spot FX, with identical commissions and margin rates. By contrast, Forex CFDs feature a contract-style, highly competitive financing model. Transparent DMA quotes. Here, IB UK ensures tight spreads and substantial liquidity as a result of combining quotation streams from 14 of the world's largest foreign exchange dealers, which constitute more than 78% of market share in the global interbank market. This results in displayed quotes as small as 0.01 of a pip. IB UK does not mark up the quotes, rather passes through the prices that it receives and charges a separate low commission. The commission ranges from 0.2 basis points to 0.08 basis points, depending on monthly trading volume. For Forex CFDs, these are rolled over, reflecting the benchmark interest rate differential of the relevant currency pair. This is, in principle, similar to the Tom Next roll used by other brokers, but offers greater stability as benchmark rates generally are less volatile than swap rates. In addition, IB UK applies a low financing spread that for major pairs starts at just 0.5% and can be as low as 0.2% for large balances. For just about all intents and purposes, trading in CFDs mirrors share trading. Efficiencies are apparent through lower tax transaction costs in certain areas, reasonable leverage, and more efficient commissions. If you're interested in trading CFDs through IB UK, you should also bear in mind some of the other benefits investing through IB Group affiliates offers. In our universal account structure, customers have access to more than just CFDs and can reach more than 100 trading venues around the world across a multitude of asset classes through IBG Group affiliates. For those of you hooked on trading on the go, IB Group's mobile trader capability is highly secure and allows account access and trading over several mobile devices. To start trading CFDs, configure trading permissions and sign up for market data for the relevant underlying exchanges through account management. Please feel free to type in questions into the chat panel at the lower right-hand corner of your screen, and at this point I'll do my best to answer them with the help of Rabe, who's here for your questions. So please go ahead and enter any questions, and Rabe, if you have any comments at the moment to just augment what we said, please feel free.
Well, just one comment regarding Forex CFDs. We are, in fact, in the process of launching them. They will be available probably towards the end of next week, so look out for those.
Okay, let's see. I'm going to open a poll on before we get to any questions that are coming in on the screen. I'm just going to put in a quick poll for IB management. So I'm just going to start the poll. We've got about half a minute to answer those questions. Questions 1 and 3 are very straightforward. If you have any suggestions on how to improve or any of our webinars, today's webinar in particular, please type that into number 2. We've got about 7 seconds left. Please hit the submit button in the lower right hand corner because we've got a second left. Thank you very much, everybody. That's fantastic. It's just going to take me a couple of seconds to compile the poll, and then we'll get back to any questions that you might have. Let's see. So right, but we've got a pretty robust offering through IB UK CFD offering, and the addition of Forex CFDs is a big plus for us, right?
Yeah, it's definitely a big plus because it offers the same kind of structure in terms of the financing that traders are used to seeing from other brokers. In other words, contract style financing, which is simpler and more straightforward than perhaps for some the cash Forex offering, where the financing is rolled together, the balances are rolled together with balances that the trader has from other activities, and is a somewhat more complicated financing model. And in every other respect, as Andrew explained, the Forex CFD offering is the functional equivalent of the cash Forex trading that we offer, including the way it behaves in TWS, and the pricing is from the same group of banks that we use for the pricing of the cash Forex offering.
And so I'm just looking at the interest schedules on the IB website. Now I got there from the home page, just looking under pricing and then interest and financing, and that brings us. You can see the interest schedule, the calculations, and the third tab there is IB CFDs interest. So you can see very clearly this table's broken out into Tier 1 and Tier 2 for balance cutoffs, and it's broken out in the rows by currency. So, for example, let me just highlight the euro currency rates there. Tier 1 for long and short balances up to 75,000. That would be Tier 1, and Tier 2. Let's see, Rabbit, does it start at 750,000?
Well, Tier 2 is between 75,000 and 750,000, and then Tier 3 is above 750,000.
Okay, and you can see the low explicit interest rates that we charge. So it'd be 1.159% on Tier 1, up to 1.81%. So that's benchmark plus 1.5%. And then Tier 2 is 0.659%. And Tier 3, the greatest volumes starting at between 0.159% and 0.84%. So it's pretty explicitly explained there on the for shares on the website there on that CFD tab, and then for index CFDs, it's explained there, broken out again by currencies. Okay, let's just come back to the chat panel and see if we've got any further questions. It looks like we don't, so I'd like to thank everybody for joining us today, unless we have any closing comments, Rabbi.
No, I think we've covered it.
Great, well, thanks for joining us, everybody, and when you hit the X button, just come back to the session. When you hit the X button in the top right-hand corner of the screen, that's going to close the session, and it will bring you to today's PowerPoint, which you can save to your desktop and review at any time. We're also going to send you the same notes in an email later today when the recording equipment has concluded the session, and we'll send you a link to this session, which looks like it's going to be a very convenient 30 minutes long. So thanks for joining me. My email address is at the top of the chat panel there. Please feel free to send me any questions if you have any about trading CFDs at Interactive Brokers UK, and we'll always try and get back to you with a reasonable answer. Thanks, everybody, and we'll see you next time. Bye-bye.